In this presentation, we will discuss the liability account of deposit held in custody of others related to colleges and universities. Deposits held in custody of others is a short-term liability account. An example when we would use this short-term liability account is if a student gave a cash deposit for something like equipment. As is the case for a for-profit type of organization, if we receive something that is a deposit, we would debit the cash. We couldn't credit, however, the revenue if we had not yet earned it. Therefore, we're going to have to credit some other type of account. In this case, we're going to be crediting the deposit held in custody of others, which is a short-term liability account. Then, of course, if we were to return the deposit that was given to us, or if we had some type of action that would earn it in the future, we would take it out of there and either pay it back or record it as income at that future point. When the college or university is required to return some or all of the deposit at some future point, it will be recorded as a liability. And that's going to be generally accepted accounting principles, typically to a general accrual accounting principles. If we get the deposit and we have to return it, similar to like if we had a deposit, say on the rent, if we were going to rent the organization or if we were renting something and we required a deposit on it that we expect to return or return some portion of it at the end of the time period, then we would have to record that typically as some type of liability. So same would be the case here, except the deposit would be called deposit held in custody of others.